In the digital age we now live in, semiconductors have become the new oil. These tiny devices are responsible for powering almost all modern day electronics like smartphones, laptops, data centers, automobiles, telecom equipment, medical devices, and several more. So, with that, the geopolitical importance of companies within this industry has become a front and center issue. Now, the semiconductor industry is a very complex global network of companies that all specialize in different aspects of the chip making process. At the very beginning, you have the suppliers of the tools and materials that are needed to manufacture chips. Companies like ASML, Applied Materials, Lam Research are some notable ones. And then you have the chip manufacturers, TSMC being the largest and most technologically advanced one. And there's also Intel, Samsung, and Global Foundries, as well as many other smaller ones. And then there are the chip designers, so companies like NVIDIA and AMD. These companies outsource their chip manufacturing to companies like TSMC, or in the case of Intel and Samsung, they both manufacture and design their own chips, which is the so-called IDM model. And then at the end, you have the electronics companies that purchase these chips for use in their devices. So companies like Apple, even Samsung as well is involved in this, all the big laptop manufacturers. There's also data centers, so companies that are acquiring servers to build out data centers, automobiles, industrial equipment, telecom equipment, medical devices, and many others. Now, the company we're looking at today is ASML, one of the most important companies in the modern semiconductor industry that is responsible for supplying a key piece of equipment that's used in the semiconductor manufacturing process. They really have three key products that they make. There are EUV lithography systems, which stands for extreme ultraviolet, which are their most technologically advanced one. They're the only company in the world that has successfully commercialized EUV lithography technology, which is why many people refer to ASML as a legal monopoly. EUV lithography systems are used to produce the most technologically advanced semiconductors right now. Now, the way semiconductors become more technologically advanced is by increasing transistor density. Generally speaking, transistor density on chips doubles every 2 years. This is what Moore's law dictates, which Moore's law was really more of a prediction than a law. It was made by Gordon Moore, who is one of the co-founders of Intel, and his prediction has held true since he made it back in the 1970s. So the more technologically advanced foundries like TSMC, which is currently producing chips with 3 and 5 nanometer transistor density, which are the most technologically advanced ones right now, these chips actually require EUV lithography machines that are made by ASML in order to be produced. And then also companies like Intel and Samsung that are trying to build out more technologically advanced foundries, they are also key customers for these products. ASML is expecting to sell 50 low NA EUV systems next year in 2025, which they sell for about 200 million US dollars per device. So these are extremely expensive products that are very complex and usually have some level of customization for the specific customer that they're selling it to. And they also sell high NA EUV systems, which can produce even more technologically advanced chips. They're only selling a few of these per year now, and these sell for a lot more, about 400 million US dollars per device. And they also sell DUV lithography systems, or deep ultraviolet, and they actually sell a lot more of these devices because even though they're not the most technologically advanced ones, not quite like the EUV systems, not all chips that get produced have to be the most advanced. In fact, the vast majority of semiconductors that are made are not the most technologically advanced. Many industries, like automotive, industrial equipment, and even certain consumer electronics, don't require super advanced chips. So the demand for DUV systems is actually much higher than EUV systems. And also, memory chip makers like Micron rely exclusively on DUV. Now, ASML is not the sole supplier for DUV like they are for EUV, as other companies like Canon and Nikon are also in this market, but they are the most dominant player in the DUV market. And in 2023, they sold 396 DUV systems, which was up from 305 units in 2022. And then they also sell M&I systems, and these are devices that essentially help optimize the lithography process, and they earn quite a bit of revenue from maintenance on previously sold devices. Now, over the past 5 years, ASML is in total up about 170%, and they currently sit at about 700 US dollars per share, which gives them a $280 billion market cap, which actually makes them the fourth largest European company in terms of market cap. But over the past few months, the stock is down close to 40%, and it especially fell a lot after their Q3 earnings, which were released back in October October, and there's a few reasons for this. For starters, their biggest customers like Samsung and Intel are delaying orders. Now, Samsung has been pretty public about their plans to challenge TSMC in the chip manufacturing space, and they are currently building out a $17 billion foundry in Taylor, Texas, and they do plan on purchasing EUV devices for it. But because of delays in securing chip customers, they've pushed back their timeline for making the purchases of these devices. Now, you could say that this is just a temporary issue for ASML because these orders are still coming, they're just coming a little bit later. But from a valuation perspective, this will impact the stock price of ASML because cash flow that is earned far out in the future is worth less than cash flow that is earned in the present. The other big issue that they're facing is their sales to China, which they said are expected to decline to about 20% of total sales next year. Basically, what happened was ASML had a huge order backlog from China that built up from around 2021 and 2022, specifically for DUV systems, because Chinese customers were anticipating export restrictions coming in the future. So they wanted to secure orders now before that happened. So a lot of Chinese sales that would have taken place in the future were pulled into 2023, which is why their sales to China grew so significantly. And this was a big reason for the company's fast growth over the past few years, and especially from 2022 into 2023, where sales to China specifically increased by over $4 billion to $7.3 billion in total sales. But what they said in their most recent earnings call back in October was that those sales levels were elevated and it will likely decrease from that level in the near term. And this ended up being a good call from ASML management because the US did recently announce new export restrictions on China, but I'll dive deeper into this part later. The bottom line is what we're left with now is a objectively high quality company that has now become significantly cheaper from a valuation perspective. It's a company with consistently high returns on invested capital. As we can see here, it's consistently been in the 20 to 30% range, and their gross margins are now in the 50% range, with operating margins in the 30% plus range. And they're able to achieve these high margins because of their technological leadership within their industry, and their industry is one with extremely high barriers to entry. Any company that wanted to compete in this industry would need to sink tens of billions of dollars into research and development over the course of probably multiple decades to even have a chance at competing with ASML. And their patent portfolio is now over 15,000 patents on their technology, and they're still to this day investing about $4 billion into R&D each year. So because of the limited competition in this market, ASML commands very strong pricing power, and this shows up in their gross margins. In their 2023 annual report, they stated that they expect gross margins to expand from where it is now in the low 50% range to 56 to 60% in a few years, which shows that they do plan on utilizing this pricing power that they have. ASML is clearly a very fundamentally strong company, but what makes them challenging from an investment perspective is the geopolitical risk. The semiconductor industry has obviously become very important over the past few decades because virtually all modern technology relies on semiconductors. So having technology that is superior to that of other countries is a military advantage. So countries, specifically China and the US, will use their economic influence to limit the technological advancement of other companies and other countries in the semiconductor industry. Hence why the US introduced the CHIPS and Science Act under the Biden administration to help fund foundries that are built on US soil. They recognized that the technological leader, being TSMC in Taiwan, posed a threat that they did have to address. Now, since ASML is a Dutch company and the Netherlands are a US ally, it's likely that ASML will comply with whatever export restrictions the US tries to impose on China or other countries. Ever since 2019, the US has imposed export restrictions against China for EUV lithography machines that ASML has complied with. So ASML has never sold any of their most advanced devices to a Chinese company. And then just a few weeks ago, the US government announced further export restrictions on certain semiconductor equipment to China, specifically computational lithography software, which is used to optimize the lithography process for DUV devices specifically. And in 2023, roughly a quarter of ASML's business was to China. So so this will impact them. But ASML did respond to this once it got released, and they said that they're not going to change their guidance as a result of these new export restrictions. So clearly, they don't see it as too big of a threat to their business. But what this does do is it adds a lot of uncertainty from the perspective of a investor. We just simply don't know what future export restrictions are going to come out and how that's going to impact ASML's business over the long term. So as a result of these new ones that have now been added, ASML stock has sold off, and it now appears to be pretty cheap relative to historical financial results. So let's now take a look and see how undervalued ASML potentially is, which I have done here using the DCF method. Now, if you want to use the Excel file that I'm showing on screen here and play around with it yourself and make your own adjustments to it, then I have posted this on my Discord server, which I've linked in the description of this video. But to start, we can start with the revenue growth. So I assumed 10% annual revenue growth for each year over the next 5 years. And this is really what the consensus is for the lithography market overall, and it's also within ASML's guided range of 44 to 60 billion in euros by the year 2030. All the numbers that I've used on screen here are in US dollars, but it is a euro-based company. Obviously, it's also a cyclical company, so it's not going to grow as linearly as this, but this is generally what is considered reasonable for ASML going forward. Now, operating margins as well, I'm assuming these are going to expand over the next 5 years from 32% to 37%, because they're also saying that their gross margins are going to expand as well. And this is a company that has operating leverage built into their business model. Their margins have expanded in the past as their revenue has grown, so we're just assuming that that will continue in the future. They also have that pricing power that we talked about before. And then I also assumed a 10% discount rate here. And then in terms of the terminal multiple, I used the enterprise value to EBITDA multiple, and I used a 25x multiple, which is historically right around where it's been over the past 5 years or so. So under all these assumptions, we can go down here. This is all the calculations here. Again, if you want to dig more into this, then you can check out the Excel file. But what we get as an end result is an intrinsic value per share of about 860 US dollars versus a current price of 718. So it does appear to be undervalued at its current price. But like I said before, because of the geopolitical risks you face, I don't really think it's fair to conclude that it's undervalued just based on this alone. Any escalation in tensions between China and the US could lead to further export restrictions, which would shrink the overall market size that ASML can sell their products to. So even though they are a monopoly in EUV devices and they're a leader in DUV devices, they have very good returns on invested capital as well, and very high margins, and virtually no competition. That's really the main thing and why people think this is a high quality company. If they can't sell to China, which is one of their largest markets, then all of that doesn't really matter because their market is just simply limited and that will hurt the business. And being a semiconductor stock, it's going to be very volatile. So you do have to be willing to hold through tough periods and not get too phased if a investment in a company like this is showing red for a little bit. So those are my thoughts. I hope you guys did find this video useful. If you did, then please leave a like. And if you're new to my channel, I'd appreciate it if you would consider subscribing. And I'll see you guys in the next video.